Well, welcome to this Investing in Africa panel. Why did I organize this? Basically, I run this Raspberry syndicate. I'll tell a little bit more about it in a minute. And I was talking to so many interesting people that basically I wanted to share. In the past 6-12 months, I've been speaking to a lot of active investors, trying to learn and pick up clues. And basically, the idea is like, well, let's open up the discussion and share. I think it's interesting for me. Hopefully, it's interesting for a bunch of other people as well. I'm recording because a number of people have asked that to see this who couldn't join live. So I'm still admitting people by hand. So what's going to happen in the next hour or so is I will do a quick intro of myself and the Raspberry Syndicate, and we'll have the panelists introduce themselves. And basically, we're going to jump straight into questions. I have a bunch of questions lined up. If you can mute yourself when you join, that would be great. I have a bunch of questions lined up, but I encourage you, as always, when I do these things, is type away in the chat window, and I'll do my best to moderate. And of course, you can jump in as well by putting up your hand. Usually, I try to keep a good flow by keeping an eye on the chat window. Maybe I should spend a second on the scope of this. So, we're talking about early stage tech and impact investing in Africa. So this is not about later stage. It's not about private equity. It's not about infrastructure. There's a lot of other topics. Investing is quite broad. We're talking here with people who invest in early stage tech startups mostly. And on the call is a bunch of founders. So we have the scrappy founders are trying to connect as well. We have also a lot of active investors and would-be investors. That's the target audience. So keep muting yourself if you join. Okay, very quickly about me, and then I'll do my best to moderate. So anecdotally, I grew up in Africa. I'm French speaking. I lived in Algeria, in Ivory Coast, and I went to high school in Kinshasa. So I have an emotional connection. It's been a long time since I've been active. I co-founded Startup Bootcamp, which runs a program. I'm not involved, but runs a program in Africa. And via Startup Bootcamp invested in some African startups, including Ampersand, which is an e-mobility startup in Rwanda and Kenya, doing a B round at the moment. And now I run Raspberry, which is essentially a syndicate of private investors, investing mostly in climate tech. We've deployed about 5.5 million euros since mid-22. And I aggregate individual checks via a platform called Odin. So basically, I'm able to pile up individual checks into one investment in startups. We're working on our 26th, and coincidentally or not, we're working on our first African investment right now. We focused on the first VC round. So we try to be helpful with founders and helping to close the gap on the last money on the first VC round. Okay, so why have this discussion? Again, mostly I'm speaking to investors, but there's a bunch of founders on the call. But what are the big questions, at least I have, and we can go in many directions. But is there room for additive capital from outside Africa to invest in early stage African startups? And if there is, how do we make that happen? So what are the lessons learned, and what are the pitfalls, the challenges, etc.? That's probably the biggest question. What are the lessons learned from practitioners who are investing today? So we have our panel will introduce themselves in a second. They're all active investors. What have they learned in being active? What are the myths and reality of investing in Africa? Please continue muting yourself when you join. I'll do it myself here. What are myths and reality? What are the typical pushback from investors as they invest in Africa? And what's some practical advice to get going, get better results? So pretty high level. So let's enough about me and enough about the context. Let's do a round of intros. So we have 4 really cool panelists among the very interesting people I've spoken to in the last few months. So let's start with Lina. Do you want to basically a quick background? Where are you based? And what are you up to these days?
Hello, everyone. Apologies for me, not apologies, but my voice is not my normal voice. Hi, Joe. He's heard me. I saw Joe in Algiers a couple of days ago. Yeah, I'm Lina Kacyem. I'm currently an investment manager at HoaQ Africa Ventures, which is a Pan-African VC firm that does invest in tech early stage startups. We have a portfolio of about 150 companies across 23 countries on the continent. I also co-founded Next Millennia Angel Network to facilitate the diaspora. My network was in the US, the diaspora from the US to invest in startups on the continent. My background is in finance. I am currently based mostly in Abidjan, in Côte d'Ivoire. But before that, I spent the last 20 years in the US. I've worked in basically VC, insurance, international development, and so on. And most importantly, I'm originally from Cameroon. So I'm also sort of like French speaking and English speaking, if not both mixed sometimes in the same sentence. Nice to meet you all.
Thanks, Lina. Joe, do you want to go next?
Yes, hi everyone. My name is Joe Kinvi, currently based in London, originally from Togo, grew up in Ireland and now London. So I run a diaspora angel network called HoaQ, HoaQ, and today we've done about 100 investments with about 700 investors across 37 countries. And the reason why I'm giving these stats is just to show how vast and wide the diaspora is. And what we really want to do is how do we encourage the people who are from the continent, now live abroad, to invest back home. We've invested about 3.5 million. My background, I'm an operator. I trained as an accountant about 14 years ago, but then I moved into tech, spent time mostly in payment. I worked for companies that you might have heard of, Stripe, Paystack, and I really like payment for some reason. What I'm working on now is I'm building infrastructure for syndicates like HoaQ. So think of Odin, but with a focus on diaspora investment communities that want to invest in Africa in a bunch of assets, which is not just venture. So we're looking at venture, debt, real estate. We're currently closing our first real estate deal in Nairobi. And it's all about providing the diaspora with investment communities, investment opportunities, and be that trust layer to make it super, super easy for them. It's good to meet you all.
Thanks, Joe. Thanks for joining us. Githiora, do you want to introduce yourself?
Sure. Good afternoon, good morning, good evening, everyone. My name is Githiora. I'm from Baobab Network. Just to give people who are not familiar with Baobab Network a sense of what we do, we are a pre-seed VC. Been operating for the last 5 years, in which time we've invested in 65 companies in 16 countries across the continent. We typically write the first check founders get outside of the friends and family round and provide a lot of support initially through an accelerator program which we run, which I can talk about a little bit later, but also help them to raise money and scale as they go after big dreams on the continent. Personally, I've been angel investing for the last 10 years, so sort of seen the first wave of startups in Kenya when it was growth at all costs. Obviously, the environment is a lot different now, and it can speak to what that means for our portfolio and how we think about investments going forward. But professionally, based in the UK, was an investment banker in London for 3 years before I joined this, and previously worked in asset management. So very much focused on helping companies in the portfolio think about unit economics, commercial strategy, and then helping the companies that are a little bit further on raise institutional rounds of funding, so the $1 to $3 million, before we kind of hand them off to Series A investors. So yeah, pretty keen to get involved, and thanks Alex again for having me.
Thanks, Githiora, I appreciate it. So I know Joe and the HoaQ Network from being a member. Githiora, I've been a fan of the Baobab Network approach. I'm keen to hear more. And Jochem, we've actually invested in a couple of startups together, including the African startup that we're doing now. So Jochem, do you want to introduce yourself?
Sure. Yes. I'm based in Amsterdam, but actually I do spend most of my time on the African continent. My background is that I have co-founded several startups in the Netherlands and also a venture capital fund in Amsterdam, and run that for quite a while before switching to basically be a full-time angel investor in startups, mainly on the African continent. I started doing that around 3-4 years ago. I've also invested in several VC funds, early stage VC funds that are purely focused on the African continent. And then now,
whoever's not speaking, can you mute yourself? Sorry, Jochem, I'm trying to find them. Go ahead, Jochem.
Yeah, so I invested in several early stage VC funds on the continent, but also am working full time basically on doing direct deals, pre-seed, seed stage, sometimes even up to Series A. My focus is actually strongly on the impact side of things. So I really look for impact on either climate, healthcare, or financial inclusion. Those are the topics I'm mainly interested in. But I'm doing that strictly from a for-profit perspective. So I'm really looking for great business models, because I believe that having a good business model behind an impactful solution makes sure that it scales. And yes, I basically spend most of my time in either Nairobi or Cape Town, but also other cities, basically on the continent.
Nice, thank you very much. So I don't know how many investments you've made, Jochem, but with the three others who dropped some numbers, there was like already 315 investments in Africa. So that's a pretty good experience set. Maybe just a minute on my side. We've already burned like 14 minutes, so time is flying. But I just looked up some numbers before we started. So Africa attracted a combined $4.5 billion USD in venture capital and venture debt last year in 23 across 603 deals. The US is 200 to 300 billion. Europe is about 100 billion. So obviously there's a big room to grow. But I'm curious to hear from each of you. What's your sentiment on the overall ecosystem and the environment? Maybe starting with Lina. How do you think it's going right now as a tech investor?
Thanks, Alex. Sorry, I was trying to quickly write a note to Jochem to be like, thank you for being a supportive LP of Launch Africa, because he's in one of our LPs. So he's not lying when he says he invests in early in VC funds.
Nice.
All right. So how is it going? Investing early stage in Africa? Well, I don't want to speak of it as if it's a monolithic place, especially living on the continent. So it depends on which geography you sort of focused on. First of all, like the rest of the world, the funding has gone down. There's also been some challenge in sort of our big four. So our big four is your South Africa, Nigeria, Kenya, and Egypt. And that's mainly due to their currency devaluation. So they've gotten a hit. The good news has sort of come from the, if you will, your second tier, so to speak, market. So your Francophone market, your Tanzania, and so on. So Francophone has been interesting because the currency is pegged to the euro. So you don't see that sort of high up and high down in terms of the valuation. Now, what's been very interesting for me to see on the tech side, it's how sophisticated the tech is, right? When you look at startups on the continent, historically, it's been looking at them solving sort of an African problem, right? But now you do see startups in deep tech, AI, really solving global problems, where you actually see an exit being a US or European or an Asian company actually buying them out because they have such a sophisticated solution, right? Given the nature of the environment, they tend to be quite creative and quite intuitive in trying to make sure that the solution will work for a wide range of customer.
That's super interesting. Can I jump in, because I want to ask maybe Joe and the others. So Joe, that Lina touched on something. Is investing in African startup, is the African continent as a addressable market, is that big enough? Should you only invest in a startup that happens to be run out of Africa but has global potential? How do you go about thinking about that? all of you?
Yeah, I think like anybody who's invested in any African country, any African startup should make sure that that company has clear expansion plans. Like just investing in one country is already a huge risk, but also while that's a risk, expansion across Africa is quite challenging. So you're kind of balancing like two things, which is very risky being in one place. So like anybody, like we've done a lot of investment in Nigeria, say in 21 or 22, when the naira was what, 500 to the dollar. Now that naira is 1700 to the dollar. And I am actively speaking to a lot of our portfolio companies around how do they expand outside of the continent, not just like from Nigeria, but how do they go to Canada? So one of our portfolio companies called Bamboo just launched a product for the African diaspora because a lot of the users have actually left, right? And they're realizing that people who use Bamboo have left, they moved to Canada, they moved to the UK, and they're essentially following these users. And that presents an opportunity for a lot of people like me who are building out of the diaspora because if anything, the diaspora is only getting bigger. And there is like while people are migrating and while expansion is now top of mind for a lot of founders, it's presenting a lot of opportunities for a lot of founders. I just want to add one more point, which is I feel like we've tried to copy the Silicon Valley style investing to Africa. And I'm sure that some people who've done investments on the continent will know that debt funding, if done right, is actually a more productive way to back founders on the continent, if done right, because you have things like, interest rates, which are kind of very different across each market. You have currency up and down. So you have to manage all these risks in order to make money. But there's a lot of ways to make money, especially when you're looking at things like debt, asset finance, and etc.
Nice. So Githiora, the Baobab Network is sort of a a hands-on investor. And like when I first talked to Toby 2-3 years ago, there was even this idea of flying in a SWAT team to get the founders up to speed on some elements. So how do you look at this question? Would you only accept startups in your program that have global potential? Is Africa big enough for you?
Yeah. So there's a number of ways I think that we think about that question. I think the first is to acknowledge the reality, and we've seen this in the portfolio, that the company, especially because we invest so early, the companies that present themselves today in 3 years could be completely different. And that's because, pivots are the nature of the game, and some are soft and some are hard. So, to give you a very concrete example, we've had 2 HR tech companies we invested in 2 years ago. One pivoted to focus, as opposed to matching talent with employers, to specifically allowing employers to hire people and pay them in a compliant way remotely. That was a soft pivot. And one of those founders actually did a hard pivot and now is essentially building a data analytics business. So I think the reality is that, going in, what a founder presents and what they actually ultimately end up doing can be vastly different. But we still have conviction because they are great founders and they have a big vision.
Yeah.
Now, to the second point, I think my personal view is that it is possible to get, unicorn companies just specifically focusing on the continent because there are a lot of 0 to 1 opportunities. One example is, in the payment space, there've been a couple examples, but if folks are following the news, there's a company called Nala, which is essentially allowing people to send money to each other, so P2P transfers, within a country as well as cross-border. And they are now basically offering this service to businesses as well. This is a company that's about 5-6 years old, Tanzanian founder. He raised a $40 million Series A at a $200 million pre-money valuation. And the goal now is basically to extend their offering into parts of Asia, et cetera, as part of the expansion plans. So that's kind of one example where you start off with an African problem, but actually it resonates in other emerging markets. And because it's a great team with global experience and investors, the potential for a unicorn and an IPO is actually a reality. The second is a company called Wave, again in the payment space. This is a company focused in West Africa that allows people to send money around. And they raised a $200 million Series A within 2-3 years of starting, just because cash is such a big part of the transaction like value chain on the continent. And so digitizing itself is a 0 to 1 opportunity. And because it's novel in a lot of these countries, you can actually get to these big valuations because the volume is justified fairly quickly. So my view is it's a bit nuanced, but I think there are ways. The best founders basically build globally, because that's you're competing for a dollar with every US or YC company. But also the best founders will find a way to grow into that $1 billion or whatever valuation, whether it's locally or globally.
Jochem, you're very clearly, both a sort of for-profit classic investor and very focused on impact. I know for a fact you have a very structured way of assessing impact before you invest. Maybe you can talk about that, but also, same question. So does impact mean, you're in Africa half the time? Is the African impact enough? Are you looking for global impact? How do you go about, selecting what to invest in?
Yeah, that's an interesting question, actually, because some impact is specifically focused on, for instance, reducing poverty, and then the opportunity to make a big difference from 0 to 1 is much bigger in Africa than it would be, for instance, in Europe. So then the obvious play would to be doing something in Africa. But what I found out, and actually when I started out doing this 3-4 years ago, I didn't really expect to find it. But what I found out is that there are some excellent universities that churn out extremely talented deep tech founders. For instance, South Africa is known for medical technology. There's a lot of geneticists that are developing potentially global cures for global diseases. So that's a great thing. I've invested in a company in Kenya that does deep tech to sequester carbon through direct air capture. Extremely talented team. You wouldn't find them more talented anywhere else in the world. So yeah, there's a lot of opportunity on the African continent also for global impact.
Lina, I rudely cut you off when you were in the middle of making some points. I wanted to go around on this topic. So, you're based, I'm not sure if you're full-time based, in Europe and Africa, but what's your view on, I always say Raspberry, my syndicate, is a post-COVID investor. In other words, post-COVID meaning we don't meet every founder face-to-face. A lot more is done via Zoom, which is, was enabled through post-COVID. What's your view on remote investing? Do you make a point of meeting the team face-to-face? Does it make a difference if they're in Africa or not? Like, how do you approach that?
No, the easy answer is no, it's just virtually impossible. So I'm based out of Abidjan in Côte d'Ivoire. And as an ecosystem is quite small right now. So I've had to invest, for example, in Morocco, in Tunisia, in Senegal, in Cameroon, looking at deals in DRC as well, because I mainly cover Francophone Africa. So it's just impossible to me. The continent is pretty big and it's unfortunately yet not well connected. So part of the due diligence is, as you know, is doing these virtual meetings, is digging into their data rooms, speaking to their customers, speaking to prior investors, if there's any prior investors, trying to really understand the market. That's sort of where you focus on. You're not meeting them face to face. It is probably adding more meetings, right? So because you get a read when you meet people in person that you may not do via Zoom, but for now, Zoom or Google Meets or whatever has been useful tools and just plenty enough to do due diligence.
Joe, what about you? What you present obviously your audience is the diaspora, so by definition they're not on the spot. How do you overcome the distance, and are there aspects of these African startups that are there criteria that are part of your selection because they're African that are different than if you were doing that somewhere else?
Yeah, well, our community started during COVID, March 2020 to be specific. And everybody was looking at us like we were crazy. Like, what are you doing? Don't you see that there's a pandemic happening outside? But so we're online first. So often when people ask, like, where's HoaQ based? It's actually based online. Like, everything is online. But what we do is we have people on the ground. So like I remember we invested in a in an e-mobility company in Nairobi. And I actually went there to, so when we're doing investment, we sent somebody over to go check the factory. And then after I went over, I actually tried the bikes, which was really cool. I am a very bad bike rider, but I tried it. So what we do is we have people on the ground that we can talk to. We can send it to meet the founder, and if they're doing something physical, we actually get to test it. We're very lucky because of the size of our network, where we have investors in Japan. So like we can reach a lot of people, and what we do when we invite people to HoaQ is like, this is also your community, and we encourage them to get involved. We've seen people who come as just investors, but become venture partners and help us do deals. They help us do DD. They host events on our behalf. Like we've hosted events in San Francisco. I haven't been to SF in about 5 years. So we've had community members to host events on our behalf. We hosted an event in Lagos when I wasn't there. So we leverage the community extensively because we position ourselves as the community where you come to learn. So typically when people want to do their first deal, they come to HoaQ, and we try our best to handhold them through that process. We have a ton of resources to help them. So yeah, we don't meet all founders, but when I'm on the road, which is maybe like 4 months a year, maybe 5, I always ensure to catch up with founders. And because the more you talk to founders, the more you learn about their business, because the business is changing. It's quite dynamic. You also get to like have your ears on the ground. I mean, I was in Algeria with Lina and I think Nabil in like last week. And I was also in Cape Town the week prior. So like while on the ground, I was speaking to founders that we haven't invested in and just trying to get a sense of what's happening. And I think that's really important when you're investing in Africa. Like anybody who's doing that, if you're not on the ground, you need to have your ears on the ground, you need to have your contacts on the ground, because things can change pretty dramatically. So you need to be super connected. I love it because, you know, Africa is amazing. I'm sure like Jochem can tell you that Nairobi is pretty cool, and I'll be there in 2 weeks. But yeah, you have to be on the ground. If you're not on the ground, you need to have people on the ground.
Yeah.
So yeah, maybe to add on that is that there's a reason I spend most of my time in the African continent, and it is for this exact reason. It's to meet the founders. The funny thing is that often I work with founders, advising them on how to structure their fundraise. Sometimes I don't even end up investing in them, but then I still help the founders with a critical part of their journey, and then they connect me to some other founder that I end up investing in. So networking is very important. But one thing that I wanted to point out actually is that what I really love about investing on the African continent, because I've invested globally also with my previous VC fund, is that the scene, basically the ecosystem of investors, is very collaborative. Yeah. Because the continent is so underfunded, capital isn't really competing with each other. As a matter of fact, if you would be the typical Silicon Valley venture capitalist that keeps the best deal for themselves, you're the only one on the cap table. And that's no good, right? That's not how the company is going to grow. So I actually have met all the founders that I've invested in on the continent, but often before I met them, I already started my due diligence from Amsterdam. I'm not always there. And I often just ask like current investors on the cap table, can you share your due diligence? And more often than not, they're very open to share everything. So yes, it's important to be well connected. But if you're not well connected yet, but which some of the listeners in this session might be, just look at the cap table and contact some of the funds that are on it, and they might be more than willing to help you.
And just to point you to add to that, Joachim, even if they're not on the cap table, if you're looking at a deal and you already have, a couple of investors that just reaching out to them and saying, have you heard of this? I mean, Joe knows, like with WhatsApp, we all share the decks just goes to one. It's extremely collaborative. So you can ask an investor, have you heard of this deal? And then even if they haven't, it'll sort of go around and they will connect you with an investor who had heard of the deal, and you'll hear the good, the bad, and the ugly.
Nice. I want to bring in the topic of additive capital, and which is basically a European or a non-African capital. Just to note that we're already halfway. So I encourage you to type away in the chat if you have questions. Let's get this even more collaborative with the questions. So in terms of additive capital. I mean, is there room? Does it make sense for, let's say, European angel investors to start investing? What should they think about? So I talked to some people, and there was questions about currency risk, geopolitical risk, even maybe cultural issues. And I know, Lina, you had a big pushback on the pushback. So maybe, does it make sense? Does it really add a lot of value? Is it so tiny that it doesn't matter? Should we be working, to bring European and other capital into African tech startups?
Like you said, I had pushbacks and pushbacks, but enjoy. And I talked about it a bit in Algiers. Yes, obviously the continent welcome European funding, just like Europe has welcomed, I guess, American funding, and America has welcomed non-American funding. There will always be challenges, but I think between what all four of us have basically said is it's about creating your network of people who have already done it so that you can learn. So it comes with a bit of humility. In terms of the risk, yes, the risks are not your typical, I say, risk compared to Europe and the US. But then again, it's a whole continent, right? So your risk in investing in Nigeria that will be reporting their revenue in the Naira that goes up and down is very different from a startup in Senegal where you can follow the growth pretty easily because the CFA, which is used in 14 countries, like Joe pointed out, it's stable, it's pegged. You see what I mean? Just like, for example, if you are investing in Ivorian or Benin or Togolese or Senegalese startups, you know that in terms of their expansion, right? Yes, those countries look small, but the way they do go about the expansion is not to try to conquer the entire country. They go from one city to the next, right? If you start in Dakar, your next stop will be Abidjan, or going to Morocco, or going to Lome. So that's how those startups sort of expand. So it's really about making sure that you get to learn the different markets, you build your network, and you will be able to sort of get around those risks. Every market has risk. Our continent is the least known and probably the one with the harsher perspective, but people have done it. I mean, I was gonna give the mic to Jochem because he's done it and he's European. So yeah, it's clearly doable. It's really a matter of getting your network and being willing to learn and be flexible.
Can I just add that, like, I always encourage people when investing in Africa, don't do it alone. Like, do it with people who have done it over and over again, and just use that as a way to learn. I know some investors who, because they've invested in Europe, they want to go and do it themselves, and they collect L's, plenty of them. Please, like, do it alongside people who have invested on the continent, and just take your time with it. There's so much to learn about Africa. And even me as an African, I started learning about 5 years ago, and I'm still learning. Like, yeah, please tag along somebody who's done it. And what that means is it also brings additional capital to some of the syndicates and some of the funds on the continent. What I'm trying to say is, like, if you come, you do it alone, and let's say this deal works out, the money has now left the continent, and we need more money to stay on the continent. And so please come and tag along with people who are doing things on the ground already. Reach out to the local syndicates because they will tell you as it is, and collaborate with them. Like, you go to Kenya, there's Victoria Angels, there's NIBAN. There is at least a syndicate in one of the major African countries. If not, there's a fund. Like, Launch Africa is actively raising. You go to West Africa, there's a ton of funds that you can work with. But I really, really don't encourage, like, somebody writing a 50K check into a startup that they met online. And, like, yeah, you probably fly to Abidjan, do the DD, and they'll set up a room for you. But, like, please talk to the locals, collaborate with the locals, and do it together.
Yeah, that's very valuable advice, I think, Joe. And because also, I mean, Africa is not a monolithic thing, as already was mentioned. Every country is different, has a different. Some markets in several countries are different, have different players, different cultures. So that's very important to understand that. But let me give you the perspective of indeed being from Europe and deploying actually capital from Europe into Africa, what I like, why I actually do this, is because indeed there is some risk, right? There's currency risk, there's geopolitical risk, there's all kinds of risks. And I get these questions a lot from people around among my peers, like, why are you doing this? It sounds so risky. And the cool thing is that, yes, it's risky, but the perceived risk is overblown. I mean, the news we get in Europe about Africa is as if it was a continuous coup and floods and whatever and droughts. That's not the case. Like most countries are relatively stable, doing relatively well, and are perfect investable climates. And also the fact that there is some cultural difference, right? You have to understand people speak the same language, basically, and since people, there's some misunderstanding going on, and all these things together, like the perceived risk because of the news and the misunderstandings, creates a fact that the perceived risk is even higher than it is, and that results in valuations being lower than they should be. So you could even see it as an opportunity if you look at it. If you know what you're doing, if you deploy your capital in the right companies, you're getting undervalued companies, and that's the big opportunity. Also, if you look at it purely financially. And then the other thing is that some criticism is like, where are the unicorns? There's only less than 2 handfuls of unicorns coming out of Africa. But do you really need a unicorn if you invest in a pre-seed round of valued at 3 or 4 million, right? You don't need a unicorn. I mean, it's not like the pre-seed valuations are Silicon Valley level. So if a company exits at 300 or 400 or even less, you can have extremely good returns. So it's a different dynamic, but you shouldn't look too much at how many unicorns are there, and really. And that's why it's important to be there, because then you realize which risk is actual and which risk is perception.
Yeah.
I'd just like to chime in as well, Alex. I think so. For the investors that are thinking more, especially from I have a fixed pot of money and I need to allocate it in the best way possible. I used to work in asset management, and one of the things that I used to pitch to local pension funds in Kenya was, one of the reasons to invest offshore is, there's exposure to sectors that just are not available on the Kenyan stock market. So, Facebooks, your Amazons, all of these kind of AI technology-driven companies, you get access to that kind of investment performance by investing offshore, as opposed to just investing in local banks and listed telcos in Kenya, as well as a couple of other countries. But I think the reverse applies in the early stage space on the continent now. Jochem was mentioning these direct air carbon capture, all these kind of companies that literally need to be based on the continent for geographical reasons, and they necessarily need African founders. And the way to expose your portfolio to that kind of alpha is by actually investing pretty early at kind of the valuations that Jochem mentioned. So I think there's a very strong, rational argument you could make to yourself as well as to investors. And then to Joe's point, they're actually, over time as the ecosystem develops, there's been a proliferation of actually people that are very focused on the early stage, sifting through, the wheat from the chaff, and really getting to the, for example, we see over 20,000 companies a year. We invest in 20. So a lot of that work of sifting through the founders, conducting DD, reference checking founders, all of that is basically whittled out of the process. And by coming in with a Baobab, with a HoaQ, with a HoaQ Africa, with a Jochem, there's actually, you're getting the cream of the crop already, because we've already kind of sifted through all of these things and kind of de-risked your investment in that way. So I think that's a very practical way. And as Joe said, it's, Jochem mentioned, it's a very collaborative environment. We are very open with our portfolio, and founders are generally happy to talk to anyone who's keen to back them. So I think there are a lot of ways and reasons to get in that are very rational.
So yeah, questions are coming in now, but feel free to jump in anytime. So from Christian, we had, could you cover the legislative framework for startups in Africa, specifically how to simplify and streamline understanding paperwork, like, shareholder agreements, investment agreements for an angel to do direct or syndicate? How different is, is it from country to country? How much of that is an issue? I mean, we're still having a debate about, if you've seen the EU Inc. campaign, even in Europe was still trying to streamline. It's a long way to go. But any thoughts on that? Is that an issue? Is it a non-issue?
Yes. No, Jochem, go ahead.
From my perspective, it's actually pretty similar, because the funny thing is that most investors prefer to invest in entities in legal jurisdictions that they understand. So most African startups actually have a holdco based in Delaware or in somewhere in Europe. So you don't have to be an expert in all kinds of local jurisdictions. That's one thing. And the other thing is that the common safe note, which everybody uses everywhere in the world, is very much used in Africa. So it's a very simple document. It applies everywhere, and most of my investments are simple safe notes.
Now, I have a problem with that, and I've always had a problem with it. I don't know what the answer is, but so when you invest in a company that's incorporated in Delaware, you're essentially excluding Africans who are in Africa who can't follow the US accreditation rules. I think you need to have you need to make $250,000 a year. I think you need to have assets of $1 million. Like the average, less than 1% of Africans can make that money. So what we've seen is Africans who are next door to these startups can't actually invest in these companies. So we took it upon ourselves to go to the UK and incorporate the UK to follow the UK accreditation rules. And one of them is you have to be a member of a syndicate for 6 months. It's not the solution, but it's better and it's more inclusive to people who are in Africa or people who are in the diaspora who just don't make $250,000 a year. One thing that I plan to work on is, can we build a framework that enables people who are on the ground to invest, and also people who are well educated but don't meet this financial threshold to invest? So next year, I will be joining the board of ABAN, which is the Africa Business Angel Network, to hopefully push this from a legislative perspective, because we need more inclusive things for investors. Like I use the term the average Joe. Like the average Joe, even if they're well educated, they understand how to do things, they can't invest because the rules don't favor them. So can we find something that protects the investors, but also enables them to invest? That work needs to be done, and it's yet to be done.
Great initiative.
But yeah. But to your point, Joe, earlier, you should not go alone. So again, even investing in these Delaware-based startups, it would be better as going through a syndicate, right? Which sort of goes around the requirement of the 250, because you're sort of like you're doing it from a syndicate vehicle. There's no perfect solution right now, but where Kim said, locally, you don't have to be an expert in every single one of these jurisdictions. As the ecosystem grows, and maybe as, let's say, 20 years from now, there's less a need for having to be set up in the US and other places. The good news is, within the continent, you have pockets of countries that already have regulations of working together, and they're actually pretty how do I put that? They're actually pretty well run as a block. So if you looking at BCAO in West Africa, or BEAC, truly the regulations are the same. And then you have OHADA that sort of oversees Francophone. So you have these little blocks. It's not yet like Europe where it's like everyone under one block, but there are blocks within the continent. So if you have an interest, you can even start with the region, and those regulations would already be similar.
Okay. I love this discussion. It's actually really about what should investing in Africa achieve, right? Where should the ownership be? Where should the money flow? And so I would actually love to collaborate on this initiative. And I do have to say, it's not the current situation yet. So if there's people listening, so it's not, for instance, tax regulations are also a thing. So every country is different. For instance, investing in a Kenyan company, I don't see any problem with that. But for instance, investing in a South African company, it's hard to get your money out. So the company might do a great exit, then you have local currency on your bank account and you cannot export it to euros or dollars and get it onto your European or a United States bank account. So that's a real issue. It's still there. I just want to put a small warning out there that this is a reality, and check that with other investors before you make a move, I would say.
Yeah, Cornelio, I don't know if you're on the call, but you're welcome to jump in. I know you have experience, dealing with these issues. But I want to bring in venture debt because Hassan has to ask the question about venture debt, and I think it was you, Joe, who brought it up at the start of the call, where you said actually the mix is now changing, and I saw a number where equity funding in Africa had gone down by 5%, but venture debt gone up by 10%. So can you just expand on, how does an outside investor, to bring my theme again, go about making that happen? What is it?
I don't have the answer for you, but I have some observations. So anybody who's thinking about debt in Africa needs to understand how the regional interest rates work. Like Kenya, I don't know, Githiora, correct me if I'm wrong here. I think Kenya is 16, 17%, the prime. South Africa is 11, Nigeria is in the mid-20s, and the BCL region is around the teens. So the interest rates vary across the continent. What that means is venture debt can be difficult. That's the short of it. But again, this is where you bring all your accounting knowledge. Mine are pretty useless these days. But you bring your team, you bring your finance team, so that you can you can take all the risks into account. But the good news is, if you make it work, the returns are pretty good. In Nigeria, I know folks who are making in the mid 30s in terms of interest per annum, and that's low. So a lot of the local funds, they're struggling so because of these dynamics, a lot of local funds struggle to invest in venture capital, and they tend to go to debt because the returns are so good. Venture expects 30% compounded a year. But if you can get that with debt with some collateral, why go into venture? I know funds like Future Africa are doing a venture debt. I know Launch is also working on one. But again, it's super early, but it's on the up. And you only have access to this information where you're spending more time on the continent, when you're very well plugged in, you're talking to the bankers, because the bankers know. And I don't know if people know this here, but a lot of the most lucrative businesses in Africa are the banks. That's why you never hear of them. They make so much money, hands over fists. And they don't ever go into venture, because what they do now, which is lending to businesses, is quite profitable.
So that's a good segue into my next question, which is, we've seen that the hot sectors have been fintech in Africa. There's been sort of a lot of laying the foundation for things to happen, payments, maybe insurance. Are there any sectors that you think are up and coming outside the obvious ones? What are you guys looking at in terms of sectors, if any, if that's the way you go about it?
I'm going to speak very quickly because I don't want to hug the mic, but 4 things: food, housing, energy, transport. The average African spends about 90% of their wallet on these 4. And in Nigeria, I think feeding is about 50-60% of their wallet. And then energy, because energy is quite expensive. So I'll encourage people to spend time in these 4 sectors, and you're pretty much capturing about 90% of the entire continent.
Food, housing, energy, transport, and unsurprisingly, with my climate tech hat on, those are the big emission sectors, that I would be interesting. So the rest of you, any sector views?
Yeah, it's very similar. I was like, why did Joe take the first bite at it? Logistics, anything climate, health, and agriculture. How do people move around? Making sure we have regenerative agriculture for food, healthcare, because we still spend a lot of money in healthcare and we don't have data. So having data on the African population is going to be extremely valuable. It's the fastest growing population, and it's going to be useful even for pharmaceuticals, whether it's in the US, Europe, Asia, and so on. Yeah.
I'll throw a bit of a wild card here. So we see a number of white spaces. Part of these are literally just bottom-up driven. But some that are interesting, and we've just got invested in a company that's offering essentially private security solutions. So offering a lot of the security companies on the continent, and their first use cases in South Africa are very brick and mortar. So there is no automated way to communicate incidents, or for people to report incidents, or for that to be mapped into a system that people can easily access and plan their own security. And that's actually a common theme across not just African markets, but a number of others. I'm not saying we're betting on things getting worse, but just saying that this is an interesting way to play that specific sector. That's one. As Lina mentioned, logistics is interesting. I personally still think payments is underserved. A lot of markets are very much cash heavy. And so I think there's still a lot of opportunities to digitize and monetize those payments in a lot of countries, Francophone Africa being one particular region. Yeah, there's quite a few, but maybe I'll pause there. Of course, climate's another big one.
Thanks, Githiora.
Yeah, I think everything has been mentioned. Obviously, it would be weird if I would have like 4 completely different industries. But maybe the cool thing is, Joe mentioned like this is where the majority of the wallets are being spent on, and that I think that's where the other opportunity is how to increase the wallet, like access to finance, access to loans or insurance. How can we make sure people can actually pay for the services they really need? I think there's an interesting opportunity there. Fintech has been very hot, has been maybe even overfunded in the last few years, and now is a little bit of a downturn. But the interesting thing is that a lot of typical fintech issues have not been solved, right? The magical bullet business model for microloans has not been found yet. So I'm sure there's plenty to discover there, and that will be the great opportunities to invest in.
So there's a question from Angela. I had to look this up. What's a SACCO? So you talked about diaspora investments. Are there also SACCOs? That's an acronym for Savings and Credit Cooperative that lend money to banks, which in turn lend money to consumers. Should they be gathering money to invest directly in startups? Does that speak to any of you?
Yeah, happy to take that. So just, I guess, for to give everyone to a baseline understanding of what SACCOs are. So in Kenya, they traditionally formed around specific, essentially labor unions. So there's some that are related to teachers, there's some related to police. There are all these sorts of there's one for the judiciary, and it's kind of like a quasi bank in the sense that you contribute deposits, and then you can borrow a multiple of your deposits provided other people secure your borrowings. So it's kind of like a community-based lending system. The way that it works currently is most SACCOs actually do provide loans directly to businesses and to individuals. So if I'm a Kenyan, I want to buy a car, people generally go to the SACCOs because their lending rates are generally a lot better. If I'm a business and I want not necessarily working capital, but I need money to put up a building, that can also be done through SACCOs. What we haven't seen as much yet is the specific question that I think was asked, which is around whether they lend directly to startups. I think part of that is there's an education piece. My personal view is, a lot of the trustees of these SACCOs are not necessarily digitally savvy, and there's been a way that these things operate that I think startups is just a new asset class. But I think, to that point, there's definitely a large capital base there. A lot of people contribute. It's very well known. So yeah, to this point that Joe was mentioning about pushing the boundary in terms of local capital, local ownership, I think that's clearly another potential source to, get local capital for these businesses.
Nice. Anyone else? Someone was asking about EdTech. None of you mentioned EdTech. Obviously, the education challenge is huge. Maybe historically not the best source of returns. Is that on your radar?
Yeah, I hope we've done one EdTech deal, but what we really pay attention to, learn and earn, right? Because like education is great, but after you educate, you need to enable people to make money. So we invested in a company called HoaQ. And what HoaQ does is they train engineers, designer, all that within 12 months and give them a 3-month internship. And on the other side, they have a company called TalentQL. So they're building pipeline for engineers to be trained very quickly so that they can go into talent queue or to be outsourced to other companies. It's one of the companies I love very much because the African population is growing very fast. What that means is we need to start leveraging technology and AI to educate at scale. We're not training enough teachers. So what I'm trying to get to is edtech is really, really important. I just don't feel like we're building fast enough and we're building profitable ventures to make it happen. And yeah, like we've backed HoaQ. There's a company I really love called Fundamate in South Africa. And Fundamate, what they do is they allow students to go through exam papers through WhatsApp. And it's one of these companies I've been leveraging AI way before AI was cool. And like while they're doing great, we probably need like 100 Fundamate. We need another 100 HoaQ across across the continent. But on top of that, how do we enable them to get jobs, learn and earn? Because like for every 20 million Africans that go into the workforce, there's only 9 million jobs available for them. So like we have that 11 million jobs that are missing every year, and that's only growing. So like ed tech, but also job tech, which is it's going to be super important. So very important sectors.
There was a question about the creative sector. Anybody investing in I don't know, movie studios? I know.
As an angel on the creative side, has been on the fashion side. West African fashion is definitely taking taking more space. So creative from mainly from Senegal. In my view, some people haven't. I know a couple of people who've invested on the Nigerian and Ghanaian side. I think it's still very new to invest on the creative side on the continent, especially even in fashion. Those are some of the first sort of angel deals. So as Joe mentioned, that's a sector where it's still about learning, but when investing in those, the instrument is usually more like a convertible note, right? Where you start as a debt, and then at maturity date, you sort of sorry, I speak French most of the day, so now I'm like losing my vocabulary.
Oh, you're doing great.
Je me perds. Yeah, so it's more like at maturity date, evaluate, yes, the word, to see if you stay for equity or if you get reimbursed. So that's more of the instrument that I've been used on the creative side.
Nice. So I think we have like 3 hours more of discussion to do. So give us a thumbs up if you. I'm gonna offer your guys' time without asking you, but give us a thumbs up if you think we should do it again. I would love to actually. I think that this could be a really cool recurring thing. But yeah, way too short to cover everything. I want to thank Lina, Joe, Githiora, and Jochem for your precious time. Probably quite a few of the callers would have jumped in with some remarks if we had more time. But thank you for the questions. Thank you. We're just scratching the surface. I mean, you guys are not every day. You're deep in the trenches. But for someone like me, just beginning to invest, Joe, you wanna add something before we wrap up?
Yes. So I think I mentioned at the start, I'm currently building technology for syndicates and investment groups, and with this particular focus west to Africa. So it's still in progress. We're still building. I think I told Alex about it. So if you want to learn more, I'm more happy to speak to you about it. I am fundraising, although I'm not pitching you, but just in case you want to learn more.
Pitch away. I mean, you're an entrepreneur. You should pitch.
I'll be more than happy to share my pitch deck with you and talk about it. For people who are in Africa, I'll be in Nairobi from the 27th for about 2 weeks. So yeah, I'm happy to catch up, grab a drink, and tell you all about what I'm building.
Nice. I shared my email in the chat. I'll do it again. Those of you who want to share, plug away. That's why we're here. And yeah, thanks again for your time. Let's do it again. I would love to do this again. And yeah, I really appreciate your time.
Thank you so much for putting this together, Alex.
Thank you.
Love it.
Thank you so much.
Thanks so much, Alex. Thanks, everyone.
Ciao. Have a good evening.